joins us live from outside the RBI. Alex, there's two options of good cups of coffee outside the RBI headquarters. I'm sure you've already tried them. But what are you looking out for?
Well, first of all, I should say, Tamanna, Neeraj, that I'm not missing you too much this morning because it's a lovely morning outside the Reserve Bank of India in South Mumbai. And the weather is fantastic. It is, of course, the outcome of the first meeting of the Monetary Policy Committee in 2026, and far be it from it being a quiet start to the year. As all of our viewers know, it's been an eventful start, particularly on the external front. So you've had the signing of two major trade treaties, one with Europe or the European Union and one with the US. So there's a lot to unpack beyond just monetary policy. The implications that will have on the economy, on the rupee, have to be considered. But on the policy rates, it's widely expected that the RBI will pause this time around. In fact, 34 out of 39 economists that were polled by Bloomberg are saying that it's going to be a status quo policy. There is an outside chance, the remainder of that list of economists thinks that there's an outside chance of a 25 basis points cut. Now, beyond the rates, what is going to be looked at? Well, first and foremost, like I said, the implications on growth and inflation. There are a couple of very important developments that have taken place. And one, of course, is the trade negotiations and the deals that have taken place. And what that does to growth. We've already spoken to economists who suggest that 30 basis points approximately that was shaved off of growth estimates will have to be brought back. Whether they do it this time around is going to be watched very keenly. But the other aspect that is going to change on the 12th of February is that the base year for the consumer price index inflation is going to change. And of course, there's also an expectation that inflation will harden through 2026. The guidance or the outlook for inflation is going to be watched very closely as well. Beyond both of those things, a couple of important points to be made on liquidity, because everybody knows transmission of rate policy takes place when there is ample liquidity. Already the RBI has tried to ensure that liquidity is available in the system. That's difficult to do when the RBI is trying to support a rupee that has been under pressure. But of course, we also know that the rupee has recovered quite a bit from the lows of 92 from the end of January. Right. So that pressure dissipates somewhat, and that means good news for liquidity. Okay. But I would also watch for the guidance on the rupee.
Absolutely. All right. Thank you for that, Alex. And we'll see you back soon.
And don't get your hopes too much. I mean, yes, this policy is great where the next policy is not going to be. So it's fine. Okay.
I know that.
Okay. Thanks, Alex. Thanks so much. And of course, we look forward to getting the real-time updates once the policy statement is out as well. We'll slip into a very quick break on that note. On the other side of the break, a lot more market conversation. But remember, our policy coverage is very active from 9:45 a.m., wherein some of the top economic voices join in to preempt what the governor could do.